Hey everyone, this is Robert with goldsilverpros.com. It is Thursday, October 22nd, 2020. And today I'm going to be continuing on the state-issued cryptocurrency and regulation of private cryptocurrency series of videos that I started a week or two ago. I started off talking about the IMF's plan for worldwide electronic money and how they're going to implement negative interest rates in the banking system and how the central banks around the world would follow suit. The next video had to do with the United States plan, including the regulation and going into place, or at least in Congress right now, for doing that here in the United States. And now I want to turn attention to the European Central Bank and the European Union. The reason why I'm continuing this series and showing you that other central banks around the world are doing this is to show you that this is going to be commonplace across the world in the next few years, and you're not going to be able to get away from it. So if you're a private crypto holder, just be aware, like a Bitcoin or Ethereum or a Litecoin or something like that, or even some of the stable coins, just be aware that they are going to be regulated and they're not going to be allowed to replace or subvert or weaken the state-issued cryptocurrencies, and all of the digital ledger technologies are being implemented by these regulatory agencies around the world. So we'll go ahead and get started, and I have a presentation for you called European Union Digital Finance Strategy, the March Towards a Mandatory Digital Currency. Now, when I started researching this last week, there was a PDF which outlined very clearly the aims of the European Union on their digital finance strategy. That PDF is now offline and redirects to a website, which you have to dig a little bit more to get to the information, making it hard to find, being less transparent on their motives, apparently. But I did find the information. We're going to go through it today. So first thing I wanted to remind you is that we started coverage on this topic in 2019 with the April article, Cryptocurrency, Gold and Cash, the Battle for Monetary Freedom, and then followed that up in August with an article entitled, What Do Modern Monetary Theory, Negative Interest Rate Policy, and Crypto Have in Common? Please go read those articles on my website. Just click on Current Research and go down to the quarterly reports, and you'll see those two reports in the archives there on that website. So who is doing this in Europe? Who has the power to do this? Well, the European states elect leaders that then form the European Commission, whose responsibility is basically to set essentially policy for all of Europe. It's a super national agency, and they have a digital finance strategy. They're basically the technocrats for all of Europe. And a quote from their website is, the Commission's work is steered by a college of commissioners and led by its president, and the commissioners work on specific policy priorities that are set out by the commission president. So in other words, goodbye national sovereignty, hello regional head of state. So what is a digital finance strategy? Well, there is a website here, link here at the top, in which I took some quotes. I'm going to read through those for you, and then we're going to work our way through the presentation, really kind of dig out what they're doing here. First quote says, more broadly, digital technologies are a key for relaunching and modernizing the European economy across sectors. A more digital financial sector would support the economic recovery strategy and help prepare the social and economic damage caused by the coronavirus pandemic. I put this quote in here specifically to show you that this coronavirus pandemic that's killing billions of people around the world is being used to implement the digital ledger technology in the next wave of technocracy across the world. Yes, I realize there is a COVID virus, but the death rates from this virus are much lower than originally thought, but they're using it anyway as a crisis to implement the next set of policies. Remember, never let a crisis go to waste, and the European Union technocrats are not allowing this to go to waste. The next quote is that the Commission is therefore today promising a pilot regime for market infrastructures that trade and settle transactions in financial instruments in crypto asset form. In other words, any sort of crypto asset, some asset based upon a crypto as defined by anything, is going to be regulated. So if it has to do with a ledger or a crypto, it's going to be regulated. For other crypto assets, the Commission is proposing a comprehensive framework that will protect consumers and the integrity of previously unregulated markets in crypto assets. In other words, we're threatened by you, Bitcoin and Ethereum, so we're going to market you in the interest of protecting consumers. Last quote, the goal of this framework is to provide legal certainty, meaning control, for the regulatory treatment of all crypto assets, whether they qualify as financial instruments or e-money. I bolded the e-money part because remember the e-money from the discussion on the IMF. They're defining all of this as e-money and they want to regulate it. So qualifies financial instruments or e-money under existing legislation or were previously unregulated. The regulation on markets and crypto assets, MICA, they're even giving this an acronym now because they want you to remember it and know what they're doing, will cover all crypto assets not currently covered under existing financial services legislation. In other words, they're casting a broad net that no matter what you do, no matter what coin you build or what digital crypto asset you form in the private sector, they're going to regulate it. It's all. And so they say this will range from utility tokens that provide access to a service, so-called stable coins. A stable coin is a crypto backed up by a real asset like gold or silver or something else. Issued primarily for payments to everything in between, meaning they're not just looking at the crypto coins. Anything related to digital ledger technology is going to be regulated. Further, in the proposed regulation, these are listed as crypto assets, utility tokens, asset reference tokens, e-money tokens, the latter two capturing the stablecoin universe. So if you think that you can get into a stablecoin and it's going to give you an alternative that will not be regulated in Europe or in the United States, well, you're wrong. So from their website, what are the main features of the pilot regime for distributed ledger technology market infrastructures? The proposed regulation on DLT market infrastructures, also called the pilot regime, which we referenced in the previous slide, aims to enable market participants to operate a DLT market infrastructure by establishing clear and uniform operating requirements. In other words, they're going to control it. And they're the ones that are going to set the requirements, not you, not the private sector. The overall objective is to remove regulatory hurdles to the issuance, trading, and post-trading of financial instruments in crypto asset form for the regulators to gain experience. In other words, they're making this up because what regulations are there? They're removing hurdles. There are no hurdles. They're making the hurdles. It's all doublespeak and BS. But they want you to believe there's hurdles. The pilot regime establishes the conditions for acquiring permission to operate a DLT market infrastructure. In other words, you have to have permission to operate what was previously an unregulated private market. Don't you gotta love it? It sets limitations on the transferable securities. In other words, it's going to put all sorts of security laws around anything having to do with crypto, and they're going to regulate the hell out of it. They can be admitted to trading and frames the cooperation between the DLT market infrastructure competent authorities and the European Securities and Market Authority. Competent authorities are, of course, the technocrats. Permission to operate the pilot is temporary and be periodically renewed by supervisors, meaning they can periodically renew or reject and rechange all of the regulations and the ability to operate under that pilot regime. So if you are able to operate on that pilot regime now, they can reject you later on. So don't piss them off because they can remove your ability to operate and to be legal in their system. Still on their website, regulation of the crypto market. What are the main benefits of today's measures? Regulation of markets and crypto assets. Of course, it's a benefit to the technocrats because it is a threat to them and they don't want you to be able to trade Bitcoin unless they say so under the conditions they want. The digital ledger technology market infrastructures, meaning anything on a digital ledger. It doesn't have to be a coin. It could be any other service. They're going to regulate that too. Why is this proposal coming now? Oh, you gotta love the reasons that they put in here. Making Europe ready for the digital age is one of the top priorities for the Commission. They're not making it ready. They want to regulate what the private market has already done. President von der Leyen tasked Executive Vice President Dombrovskis, sorry if I'm mispronouncing that, to ensure a common approach with member states on crypto assets. In other words, everybody has to follow the rules. Sorry, no exclusions. Okay, in their regulation and in their actual proposed legislation, it has different chapters. It's kind of like a regulation you'd see proposed for U.S. Congress, and they really detail it. But I wanted to highlight one thing in Chapter 1. Electronic money tokens have to be approved. Requirements to be fulfilled by all issuers of electronic money tokens. Sorry, that means everybody. No electronic money tokens shall be offered to the public in the union or shall be admitted to trading on a trading platform for crypto assets unless the issuer of such electronic money tokens, one, is authorized, meaning approved by the state, as a credit institution or as electronic money institution. When they say that you're a credit institution or electronic money institution, they can bring in all previous financial regulations on top of you. They don't have to rewrite them. That's essentially what they're saying. within the meaning of this directive, which, by the way, was set in 2009. So they're bringing you under existing market regulation. So sorry, you weren't going to escape. I told you this was coming. Complies with requirements applying to electronic money institutions set out in titles 2 and 3 of the directive, unless stated otherwise in this title. So they're equating it to a money institution. They're equating cryptocurrency to money, and they're going to regulate it. You're not going to be able to get out from under the technocrats in Europe. On this independently reported article at Ledger Insights about the digital euro, it says that the European Central Bank confirms exploring digital euro as a retail wholesale CBDC, central bank digital currency. Aha, this is where they bring in the central bank digital currency. And not only are they confirming exploring it, but in Bloomberg on October 1st, it was reported at this article up here, ECB applies for digital euro trademark amid feasibility study. They're going to call it the digital euro, and it's going to be a central bank digital currency, and there's nothing you can do about it. They're going to digital currencies everywhere, in line with the IMF paper written in 2015 that I started this video series on. It's not just the US, and it's not just Europe. They're doing it in Asia as well. And here, ladies and gentlemen, is the proof. At this link, the EU digital finance package is a major step, as reported by EBFD EU from the European Banking Federation. EU digital finance package is a major step forward. This is in September 24, 2020. Today's European Commission adoption of a comprehensive package on digital finance is a major step towards the comprehensive regulatory framework for financial services that will help make the European Union fit for the digital age, according to the European Banking Regulation. The package consists of important Commission strategies on digital finance and retail payments, together with legislative proposals on operational resilience and crypto assets. The EBF and its members have contributed in all relevant consultations. Key things to pull out of these paragraphs: digital finance, okay, anything having to do with digital ledgers and finance. Retail payments, that's payments by any private crypto coin, stable coin, together with proposals on crypto assets. That means any sort of financializations of a cryptocurrency or a crypto asset, like on a trading exchange, for example. There you go. They're going to regulate the whole thing. Not to be outdone, the commercial banks, according to a Ledger Insights articles, have developed their own system called Finality. And this is where I love the naming conventions of the commercial banks. At least the states try to package this or couch this in really soft and warm and fuzzy language. We're protecting consumers. We're bringing us into the modern age. We're responding to COVID. Well, the commercial banks just call it Finality, like you're never getting out of it. Sorry. Backed by NASDAQ, the trading market in the US, and 14 global banks, as you can see them all here, they developed their own blockchain payment system called Finality. You got to love the name, Finality. It's over. That's what they're trying to tell you. They're being very arrogant in the way they name this. It's over. You can't escape. So I don't care where you have a bank account. I don't care what kind of currency you're using. It's going digital. They're going to regulate it. The altcoins, the private cryptos, the stablecoin, it doesn't matter. It does not matter. And you can't run away from the US to Europe. You can't run away from Europe to Asia. It's going everywhere. The IMF set forth the plan in 2015, and you can see the entire world is moving to it. Just too much information on this, guys, to deny what is going on across the world. They're going to central banks, digital currencies everywhere, and they're going to regulate the hell out of private cryptos. They're going to basically create exchanges of those financial assets, which they're going to regulate and prevent you from having private financial transactions using crypto technology or using crypto coins. Of course, if they're regulating them, they can turn the other way when their chosen toadies decide to manipulate those markets, like as what happens in the US all the time. Same thing. It's going on everywhere. Can't escape it. The move is on. Can't stop it. The only way is to stay out of the system. Gold and silver is the only thing that I can think of. Again, in the US version of this video, when I talked about the US government, I said, go complain to your congressman, go complain, because I think the US is actually behind the European Union here a little bit. And you have a chance maybe to delay the implementation of this US. I don't know what you're going to do in the European community. If you're over in Europe right now, I think you're screwed. They've already approved the legislation. You've got the supranational agency that sits over your sovereign nations. You know, and there was this thought in the alternative media community that when the euro eventually crashed, when this next debt-based fiat system crashes and the euro crashes, all these countries would go back to their own individual currencies, like the franc and the Deutschmark and stuff like that. They're not going to allow that. They're just not going to allow it. You know, they know the system's going to crash, and they're going to a system which is going to allow them complete control. And remember, it's not just control, and it's not just a creation of the central bank digital currencies. It's the negative interest rates in the banking system to discount your labor to pay for their government programs so they can institute forms of communism, socialism, those other isms, and to control people via technocracy across the world. With that, I wanted to recommend the Solari report to you guys. Many of you may know of Catherine Austin Fitts, former Assistant Secretary of Housing and Urban Development here in the United States, who has a service called Solari Report. Go to solari.com. I'm a member, and her third quarter, but she sends out this book, and it's also online. Her third quarter report has to do with the state of our currencies, the end of currencies. You can see that right there, the end of currencies. And she has a whole, I don't know how many pages, like 200-page book, 167-page book on the end of the currencies. If you guys have not signed up for this, it's a couple of $100 for the digital only, and I think $350 or $360 for getting the print as well. I get the print so I can have the books, so I can get it online and I get the books. But just chock full of information, tons of stories and references, bibliography, charts. I mean, you can see this is a high quality publication. It's in small print. I have to put on my reading glasses to read this, guys. It's very small print. I don't know if you can see it. Chock full of information. Catherine Austin Fitts does an absolute wonderful job. I'm not affiliated with her in any shape, way, or form other than I'm one of her subscribers. And she talks about this very topic in detail in her third quarter newsletter. If you want the book, or if you want even the digital version, go sign up on her website. It's a paid service, but it's well worth it. She goes in detail, all the same stuff that I'm talking to you about. It's a confirming resource from someone who is absolutely brilliant and knows her stuff, was part of the US government, and understands how those bureaucrats work. And she's got it covered here in this masterpiece, which I've just started going through. There's so much information. Fully recommend you go check her out. That's going to be it for today's video, guys. I'll be back next week to talk about the precious metals again. In the precious metals market, we're getting close to the end of October, so it'll be fun to kind of wrap up the month and see what's going on there. Hope you guys enjoyed this video. Until next time, this is Robert Keens with goldsilverpros.com.